slide. So this is basically how we build our portfolios. They're all designed to, suit a different risk profiles. We have, the normal range of, conservative, balanced growth and high growth. We've added ethical growth and ethical high growth, for those, because there's such a wide selection of ETFs. You can construct a portfolio that just looks at ethical ETFs effectively. So these are ETFs that are rated by RIAA, the Responsible Investing Association. So we know they're ethical, but you can construct a portfolio that's got equities, bonds, property, which is fully ethical. We use long-term, as the slide says, we've got long-term investing principles and an investment committee that has, a number of prominent people on it. Our research, we tend not to change our portfolios very often, because one of the things that detract from your performance is obviously transaction costs. And if you're buying and selling different ETFs, you can crystallize capital gains for your investors, or you can lose some performance because of the bid offer spreads and the switching costs. So typically we tend to find the lowest cost providers of an index that we want to invest in, whether it's international indices or domestic indices, and we tend to stick with that one. When there's a cheaper one that comes around, we do a lot of analysis to make sure that we don't crystallize capital gains for the investors that are currently in there, because we could switch from an ETF that's got, say, 5 basis points in management fees to one that's got 3 basis points in management fees. But to save 2 basis points, we don't want to crystallize tax for 80% of our investors, and the cost of, for them to lose money in tax would be a worse outcome. So it's better to stay invested, to not transact very often, and to stick with the asset classes you've got. We do adjust our portfolios on a quarterly basis. We tend to stick with the typical asset allocations across equities, growth assets, and defensive assets, across international assets, international equities and domestic equities, international bonds, domestic bonds, infrastructure, and property. And we rebalance to make sure that we're tracking those benchmarks, we use the Morningstar balanced growth, high growth indices to make sure we're tracking those benchmarks that we've set ourselves as closely as possible without creating too many transactions. And the last one that's important to making sure we do meet those targets of targeting those benchmarks that we're trying to meet or outperform is to make sure we don't charge too much in fees. So the most important thing, which Paul Clitheroe, our chairman, has said, and Alan has mentioned as well, you can control your costs. You can't control your outcomes, but you can control your costs. So it's very important to make sure that you don't spend too much money on fees, you don't spend too much money on transaction costs, and that gives you the best chance of getting an outcome close to what you're expecting. I think Alan, your sound's still missing, but a few technical problems. But let me continue.